So, Netflix's recent earnings report has sent its stock soaring to record highs with a 10% surge, and that's got investors and analysts taking notice, right? I mean, the company's financial performance is continuing to impress, with significant revenue growth and new subscriber additions, and its market position appears increasingly robust. But can Netflix sustain this momentum and drive further growth in the highly competitive streaming market? That's the question. And it seems like they're well positioned for future success with their strategic investments in original content and data analytics. But what are the specific drivers that will propel its stock to new heights? So I've been looking at Netflix's current stock trends, and one key indicator is that the stock has recently surged in price by nearly 10% post-earnings, which has taken it to new all-time highs and confirmed support at critical levels. This uptrend, along with a 52-week range of $392.26 to $766.28, suggests there's potential for continued growth. Analysts are predicting the stock will gain 15% by year-end, with a target price range of $800 to $925. A moderate buy consensus rating based on 35 ratings also supports this optimistic outlook. However, forecasts also indicate a potential 2.12% downside in the 12-month stock price forecast, which may create buying opportunities for investors. So Netflix's financial performance has been a key driver of the company's recent stock surge. They reported $9.8 billion in net revenue for the third quarter, which is a 15% year-over-year increase. This growth shows the company is doing well expanding its user base and managing costs. Their operating margin improved by 700 basis points, although it was slightly below what everyone expected. They also had strong cash flow, which let them keep buying back shares. They reduced the share count by 2.7% in the third quarter. Their financials look good, showing they can keep their cash flow and margins up, so they're set up for long-term success. They had double-digit cash flow growth, which supports them continuing to buy back shares. They also raised their earnings guidance, which shows they're feeling positive about how they'll do in 2024 and 2025. So there's been a significant influx of new subscribers that's really helping out Netflix's growth, and it's pretty cool that international markets are playing a big role in driving this expansion. They added 8.5 million new subscribers in the second quarter of 2023, and a lot of those came from international markets. The ad-supported regions are also looking pretty good, with the ad business making up 50% of signups. To keep those subscribers around, Netflix is using things like exclusive content and user engagement. As the subscriber base grows, so does advertiser engagement, which is helping out revenue projections. The growth in subscribers and engagement is a key factor driving Netflix's revenue growth, and that's supporting the company's financial performance and future prospects. So the company is really focused on creating high-quality content for its growing number of subscribers, and they're spending a lot of dollars on original content. This approach has led to the creation of super popular series and films that really help keep subscribers around. They've also partnered up with some big-name creators, which has really added to the diversity of their content. They use data analytics to help guide their decisions on what content to create and what to buy. And by focusing on international content, they've been able to attract audiences from all around the world, which has really helped solidify their position in the market. By prioritizing high-quality content, Netflix has basically become the leader in the streaming market, and their content strategy is still driving growth and engagement. They're expected to keep using this approach to drive their success. So competition in the streaming market is still a major challenge, right? I mean, you've got big players like Disney Plus and HBO Max that are really gaining traction, and because of that, Netflix's market share is being pressured. Global market share has actually decreased slightly due to increased competition. But despite that, Netflix still holds its leading position with a large subscriber base and a pretty diverse range of content offerings. The thing is, its ability to adapt to changing consumer preferences and technological advancements is going to be super important in maintaining its market share. Netflix is making strategic investments in original content and user engagement initiatives to differentiate itself from competitors and keep its subscriber base. And it's also going to be really important for them to effectively manage costs and invest in emerging technologies to stay competitive. So Netflix's future growth prospects hinge on several key drivers. It's all about its global subscriber base continuing to expand, making strategic investments in original content, and really pushing advancements in user engagement initiatives. The ability to attract new subscribers, especially in international markets, will be super crucial in driving revenue growth. I mean, think about it. Netflix's focus on original content is going to help retain existing customers and attract new ones. And it's not just about creating any content, it's about partnering with some of the most renowned creators out there and using data analytics to guide those content decisions, which will really enhance the company's offerings. Plus, advancements in user engagement initiatives like personalized recommendations and interactive content will definitely help increase user satisfaction and loyalty, which will ultimately drive growth. So, several key indicators suggest that Netflix's stock price is poised for significant growth, driven by the company's strong financial performance and sustained subscriber growth. The current stock price is $763.89, and it's expected to increase, with a target price set at $739.38, driven by user base and engagement. Analysts predict a potential 15% stock gain by year-end, with a target price range projected between $800 and $925. The 12-month stock price forecast indicates a 2.12% downside at $747.70. However, the high forecast target of $925 and an average forecast of $747.70 suggest a positive outlook. With a moderate buy rating based on 35 analyst ratings, Netflix's stock price is expected to continue its uptrend. So Netflix's current stock surge is like super indicative of the company's robust market position and growth prospect, right? Their strong financial performance, driven by revenue increases and new subscriber growth, really underscores their competitive edge. They've been making these strategic investments in original content and data analytics, which are poised to drive future growth, and that's pretty cool. Analysts are projecting a 15% gain by year-end, which would bring the stock's target price to $800 to $925, solidifying Netflix's status as a market leader in the streaming industry.